Good morning. I'm going to give an overview presentation that I've called Shining a Light on the Global Cassava Market, exploring the multitude of factors that impact farm gate prices and livelihoods. I'm Jonathan Newby, and I'm presenting this on behalf of my colleagues Tui, who has been responsible for collating and looking at some of this data, and also Eric Delacroix, that has made some of the maps that you'll see in this presentation. So in terms of the design of the ACIAR Cassava Value Chain and Livelihood project, it really seeks to work across different levels. Firstly, to understand what's happening during a diagnostics phase, then to conduct activities at the farm level, and then through a series of consultations and dialogues, look at how we can work with value chain actors to scale up technologies that have been developed to improve the sustainability of cassava farming. So as you can see here, the focus of this presentation is on the global markets and external forces that really influence how those local markets function, which in turn influences livelihoods and then the economics at the plot level. So in terms of the project objectives, this presentation is related to objective 1.1 in both of the projects. And why we wanted to do this and include it in the project, there's a number of reasons. Firstly, it's really important to understand where an industry is going. I think cassava is often lumped into the discourse around boom crops, but is this a boom crop that usually entails that there is a bust, or is this an industry that is continuing to grow? So what are the underlying drivers for the current expansion, and what does it mean for the future? It's also important to understand what drives both demand and supply, to understand the risk that maybe farmers are exposed to. Finally, we found that trying to shine some light on this also helped build some trust between actors in the value chain. I think you can imagine if you were receiving a price for your cassava somewhere up around here in 2015, and then as prices fell here, most farmers have very little understanding of what their crop is actually used for and tend to blame processors and traders for ripping them off and not paying them a fair price. So we found that introducing to farmers and different actors what cassava is used for was a useful conversation starter. So from all that, we get to do the farm level economics and then calculate what it means for both livelihoods and industry development. And then the real aim is to see, well, is there an incentive for anyone in the value chain to either adopt that technology in the case of farmers, or to bring that technology and scale it in the case of other value chain actors. In terms of the output that we put in the original proposal, the plan was to produce just a market update every year and circulate that amongst the team and other key stakeholders. We started off with a very small Facebook group that was aimed at just communicating between the project team, which later became one of our main methods of outreach to various stakeholders. The project team's written a number of blogs. We have the website, of course, which you're all now very familiar with, and we've made presentations in a number of forums that are uploaded on the internet. One of those forums that has been really important is at the industry level. So we've shared a lot of information at industry forums. We've presented at Starch World a number of times, or the World Tapioca Conference. And we've also been able to use those connections made during those meetings to bring together stakeholders, such as the photo on the left at the bottom, which is the president of the Vietnamese Cassava Association and the president of the Thai Tapioca Association. As I mentioned, the Facebook group really has been our main outreach method. When I last checked, we had over 1,000 members that are coming from 59 countries. Of course, there are some members that aren't active, but in the last 12 months, 700 of those members had been active, and then in the last month, over 650. In terms of posts, we averaged around 250 posts a year, and around 4,300 reactions. You can see on the graph down here that it really was the project countries that featured most heavily in the membership. Cambodia, by far and large, the biggest membership, followed by Laos, Vietnam. The next green one is actually Thailand, before we get to Indonesia and Myanmar. In terms of age, we had a large spread. Most of the people you see here on the right tend to be retired CASSAVA researchers from around the world. But yeah, basically we picked up a lot of members from the 25 to 45 age group. These tended to be people from all parts of the sector. We had farmers through to higher level policymakers, and included a number of key processors in the value chain working for global ingredient companies. So I think we had a great coverage of memberships. One thing we are aware of, the language was a factor, and that we couldn't really engage with all those members who didn't really speak English. And there was often times when you would get a reaction when you know that that person had definitely not read what we were posting. So the project collected a lot of information from various sources. In terms of where that information is going at the end of the project, we are developing what I call the CASSAVA Lighthouse, which will be housed at the Alliance of CIAT and Biodiversity. And we'll be uploading all that information and also continuing to do some of the analysis and writing the blogs and outreach to communicate that information to different people. So one of the big impacts that I think Objective 1.1 had was we built a community of people within the industry who were really willing and interested to share information. So I won't read some of these quotes, you can check them out later, but we have people from the Thai Tapioca Starch Association, individual starch processors who provided some feedback. We have policy officers from FAO in Cambodia, as well as Neng Paul from the CAVAC program, who also participated in a number of our events, including the meeting in North Sumatra. As I said, we had quite a few retired or almost retired CASSAVA researchers who were really interested to stay connected and provided a lot of advice throughout the life of the project. And the final one I've got there is actually a former processor, probably one of the biggest in Africa, in Nigeria, who always remained connected and was interested in what we were doing in Asia. So now I just want to give a bit of a flavour of what we did rather than to go into a whole lot of detail. And where we usually started in the project, regardless of whether it was at the farm level or at a policy level, was to get people thinking about what is CASSAVA used for. Because it's very hard to look at what the future holds if you don't know what it's actually being used for and what other commodities may impact it. So what I say is it's a multi-billion-dollar commodity that most people know nothing about, and that included farmers, government, researchers, and including donors. So you can see here at the start of the project, we used to say it was over a $4 billion export crop for Southeast Asia. What I used to get people to focus on the demand side is to think about different applications and whether there's a substitute that can be used in that application. So I broke that down into three elements. Firstly, commodity markets where cassava chips compete with other forms of carbohydrate in things like animal feed or the ethanol market. So you can substitute maize or sorghum, wheat, molasses, and then oil and gas obviously into those energy markets. So you're largely competing on price. You also have a similar situation in the starch market where you mainly compete on price, and deep processors can substitute in maize or potato starch or indeed sugarcane if you're talking about sweeteners. And then finally, you have areas where the market is really looking for the functional properties that cassava brings. And I think this is a growing market as consumer preferences change. And we have the whole clean label segment where processors are looking for something they can use in their food products that can mean that it's an ingredient rather than an additive, which of course adds a premium onto that product. So just to quickly reflect on that, you can see here nearly all the major ingredient companies now have a clean label tapioca starch. And this isn't just something they've decided to do without any research. So a lot of these organizations have commissioned a lot of consumer research to look at how they market starches, and often they use the word flour, for instance, rather than starch because it sounds more natural. But it's become a really important part of the R&D, and we'll touch back on that later on in the presentation. So of course, prices depend on the supply side as well. And again, this isn't something that can be considered in isolation. So a farmer's decision to grow which crop will depend on the price they can receive to other commodities that will grow in that agroecological zone. And of course, that is influenced by various policies. There can be changes in the production costs. We know that labour costs are increasing, and the ease of mechanising different crops obviously is also changing at different paces. To think about mechanising this hill in Sonla, for instance, is something that is quite challenging. The long-term supply is going to be affected by climate trends, and we know that cassava is a relatively climate-ready crop compared to other crops. So this will maybe influence that decisions in the long run. But the short-term supply, of course, is impacted by flood and droughts each year, which we definitely saw within the life of the project. Changes in land suitability started to play an issue where people may move out of one crop into cassava if land productivity is falling, but also moving out of cassava into other perennial crops as land may even degrade further and the cassava yields fall. And finally, one of the more recent impacts has been that of pest and disease, which we'll discuss a little bit later and also later in the week. So just quickly to reflect on how relative prices have been moving around. On the left, you have annual crops where farmers can basically decide on an annual basis what crop they produce. And cassava has been very attractive after the slump in 2015-16 against, say, maize and sugar. On the right-hand side, you have more long-term decisions. So farmers deciding whether to convert to palm oil or coffee or rubber, or indeed whether to renew those plantations as they hit old age or whether to renew leases. So again, cassava recently has been quite attractive, especially compared to coffee, and we'll see that on the next slide. So here you can see just some media grabs quite recently. On the left is the talk about the impact of sugar policy in Vietnam on the the profitability of sugar processors and how that will probably lead to a reduction in sugar area. And on the right is quite a very recent publication looking at the conversion of coffee land in southern Laos to cassava. Basically, they're saying in that article that farmers are making far more money out of cassava, so there's very little interest in renewing those plantations. So over the life of the project, the impacts of supply and demand have meant that it's been a very wild ride for farmers. We had things like policies reform, especially the maize reform in China. We had floods and droughts impacting large parts of the supply area in Thailand. And then, of course, we had the expansion of CMD, initially in Cambodia and Vietnam, and now moving into Thailand and also China. And then more recently, we've had COVID, which has also started to have some small impact, but the full extent, of course, is not known yet. One thing I tried to communicate to both farmers and policymakers is that, it doesn't matter if the price goes up or down, people are going to suffer. So if the price gets too high, This is not necessarily a good thing, although farmers in the short run may see it as a good thing, because processors will eventually start to look for substitutes. And we have seen that in the life of the project, especially in Indonesia, for instance, where some of the big sweetener manufacturers have really been looking for a substitute to tapioca starch. On the other hand, if the price gets too low, of course, farmers start to look for another crop to grow, and then processors also start to suffer. So it really is in the interest of both farmers and the industry to keep prices within the train tracks. The next group of slides I just want to touch on is where cassava is grown and what has been happening. So I'm sure I don't need to really emphasize this for this audience, but industrial or commercial cassava really is a Southeast Asian supply story. But we say that it does have implications for Africa, where there are a number of attempts to commercialize cassava production in countries where it has traditionally been largely a food crop. So in Southeast Asia, whilst only making up 13% of the total area and 25% of production, it basically dominates the global trade in cassava roots, chips, and starch. And we've always said that the cassava revolution has been a market-driven one, but it's been heavily influenced by policies. So that, again, there's been a number of phases which we'll touch on here, but initial expansion in Thailand, obviously driven by various policies, followed by the changes in China's policies that influenced the further expansion. So we'll come back to that in just a moment. Here you can see Cambodia's area increasing in the last 10 years, and now it's more difficult to pick up here because this is FAO stats, and it really has been in the last few years. The area in Laos has increased significantly as well. One idea that we really tried to communicate, that cassava is grown throughout the region and is still an important famine crop in many upland communities, but we really see commercial production around these processing hubs, and that there's a large amount of cross-border movement of products, planting materials, so the stems, as well as capital and technology and labour across those different borders. So, and this is not a small amount of product moving about. This is multi-million-dollar consignments of roots moving, large investments, and of course, large-scale labour moving between these countries. So I've called this slide Facts and Favours. So the map on the left is a quite a pretty map, but the amount of time and effort that went into getting the data to put that map together is quite considerable. In all countries, the data isn't really collated at the district level, and you have to go to every province basically to get the district level production. We still have issues with long lags. So if you're using FAO data for anything, you have a 2 to 3 lag. The national data is usually a 1 to 2 year lag. And then once you do get the data, we know there's huge discrepancies in what's reported and what's really happening. So there still is a desire, and work is ongoing to see how we can use remote sensing to get a better idea of what's happening in production each year, and also the timeliness of when things are getting established and harvested. But we're not there yet. One thing we were able to use the Facebook platform for was to track prices throughout the region. So this is just a snapshot from December in 2019, looking at how prices varied between the region. And basically you get to see that you have a number of reference prices. So T-min is an obvious reference prices, with the prices in Cambodia in one direction basically impacting from that based on the transport costs. The Thailand price is still what people look at because it's most readily available on the internet. It's important to remember that Thai prices are quoted at 25% starch, where in Vietnam usually they're quoted at 30% starch. So here I've calculated with the penalty that you would pay in Tainan if you did produce 25% starch, or here the premium that you would receive in Thailand if you were producing 30% starch. On the right hand side you can see Indonesia, and you do have these very different markets. You have the starch markets in Lampung, for example, and at that time prices were quite high. You also have the mixed markets in in Java, where you have both sweet and bitter varieties, which creates a bit of confusion when you're looking at price data. But of course you have the remote areas. Now this is for bitter varieties here in Flores. If you're buying sweet varieties basically by the bundle in the market, the price per tonne is extremely high, but the demand is very limited. An important point that we discussed in all situations is that freight and logistics has a real impact on the price that farmers will receive. So when you're looking at the price in Bangkok but you're in Champasak, you have to remember that for this starch processor in Champasak here to deliver to the market, they report that it costs them about $85 per tonne in freight and logistics. And a lot of that is at borders where there's different payments. And this really starts to impact what price you can get for farmers, but also impacts where you can locate a processing factory and be competitive. Another important fact that we emphasised was that although Indonesia is not connected physically to mainland Southeast Asia, it's very much connected to the market. And we see that Indonesia still being the second largest importer of cassava starch, despite being one of the largest producers in the world. There's a few reasons for this. As we said, there's different segments within Indonesia. But basically what we see is when the price in Thailand delivered to Indonesia is more competitive, the processors, say in Surabaya, start to import cassava starch from Thailand. So to highlight that point, when we look at Surabaya down here in eastern Indonesia, we say it's around $30 a tonne to move starch from Lampung, the main processing area in Indonesia, to Surabaya. However, it's around the same price, slightly more, to move starch from Bangkok to Surabaya. So you have to be competitive against Bangkok if you're producing in Lampung. You can't get any real protection from producing in the same country. So when it comes to policies, we say that cassava is often not a high policy priority in many of the countries we are working, but it's always highly impacted by these policies in other commodities. A good way to start that conversation was always to go to the historical development of the industry with reference to how the Common Agricultural Policy in Europe and the protection of domestic grains created this opportunity for cassava from Southeast Asia to come into Europe for animal feed. It's interesting to see some of the geopolitics that were also part of this discussion, and from some of the reading is that a lot of this support was directed to help Indonesia gain market access, but indeed it was the Thais that captured that opportunity. The second policy, just quickly, was of course the impact of the Chinese maize policies and the price supports during this period here, which kept increasing, which was fine until global maize fell, and then the Chinese government were in a position where they were stockpiling huge amounts of maize. This gets very expensive, so in March 2016 we saw that price support completely removed, and we saw maize prices in China fall back to where they probably should have been. And of course this impacted the cassava market. So you can see here the cassava starch price basically following Chinese maize prices down as that occurred. However, we did see this recovery here, and as you can see on the right hand side, After a period of alignment, cassava starch is now trading at a premium over maize starch again. So the question is, how long can this last? And I want to come back to an earlier slide where we were looking at those different segments of the starch market. If you're trying to sell cassava starch to a sweetener processor, you're not being very competitive on price anymore. And this is one reason why we see a lot of starch processors really doing the R&D into how they can add value to the crop. Another policy that is influencing the sector and continues to is that of biofuel. A lot of countries in the region where we're working have various biofuel mandates, and this influences demand for roots. So what we tried to do was to show that this is the case for Thailand, that to actually just buy the roots to convert to ethanol actually was far in excess of what the price of ethanol is. So on the right-hand side, you can see for an ethanol processor in Vietnam, this is the feedstock cost, and the other costs are producing ethanol with molasses. Next is with dried cassava chips, and finally with fresh roots. And here is the FOB Chicago futures price for ethanol. Now, of course, you've got to add some freight, and then there'll be some excise coming into a country. But as an ethanol producer, it's very hard to compete for the roots against the starch sector and produce ethanol at a competitive price. However, there are a number of subsidies throughout the value chain to encourage the production of biofuels, which is impacting the demand for cassava and, again, the price of cassava roots. Now, this was seen as a good thing when cassava prices were low, but now I think you will see the starch sector start to wonder whether this support unfairly penalises their industry. And as secondary processors start to look for alternative feedstocks. And of course, there are some non-price trade barriers. Some of these are essential, and we saw quarantine around the movement of stems. This did flow over to roots for a while, and with concerns that roots may also transmit disease, but we seem to have resolved that issue. There are some quality standards that have caused some trade barriers into China for a period of time. But there's also some policies that are restricting the export of raw products, especially out of Laos, where there's a Prime Minister's decree encouraging domestic value adding, not only the cassava sector. This has got a number of sectors, including forestry, caught up in the policy. And of course, there's a whole range of geopolitics at the moment and concerns between trading partners, including Australia and China, which will impact sorghum trade, which again may have some small impact on the demand for cassava. So I use this slide basically to say, the outlook for this cassava farmer on top is influenced by a wide range of policies aimed at supporting domestic farmers, achieving national self-sufficiency, or promoting the development of various sectors. And the important point that we really emphasized is this is when we talk about policies that influence these farmers, it's not only policies in the commodity of concern, being cassava, and it's not only policies in the region of either production or consumption of cassava. So a whole range of things we need to keep our eye on when we're looking at what the future holds for cassava farmers. I just want to touch on a few shocks that come, and shocks aren't new, and I've just put in here the historical impact of the cassava mealybug, which saw yields decline around this period here. And of course, when yields declined, there was this very rapid increase in prices before a recovery. Now, it's a little bit difficult. There's a lot of things happening around here with the world food prices spike, and there was a lot of negotiations over, say, potato starch between China and the EU at that stage. But definitely the impact of mealybug the introduction of mealybug impacted supply and prices. So it's coming back to more current times. In our Asian story, we have some of the fastest growing economies in that area we're working, and that's leading to an increased demand for animal protein and, of course, an increased demand for animal feed. On the left, you can see the import bill of maize for Vietnam, which I think always shocks people. Close to $2.5 billion of maize being imported into Vietnam. But then you have an impact like swine fever, African swine fever, that resulted in a large culling of the swine herd, which will impact feed demand. At the same time, you had fall armyworm. It's a little bit hard to get a handle on what the current situation is with fall armyworm in Vietnam, but we know it's spread through the main maize producing regions of the whole area. So the total outcome, African swine fever plus fall armyworm means what for cassava? It's a very difficult question, and the information really isn't readily available for the cassava sector to add up all those different parts of the equation. Finally, touching on cassava mosaic disease. This is a disease that was introduced several years ago into this part of Cambodia and is now rapidly spread throughout the main cassava producing regions. In terms of impact, this is probably a good slide to have a look at. On the left, you have the import of Cambodian roots and chips into Thailand. So from 2017 to 2019, a $95 million reduction in those exports. And then on the other side, for Vietnam, Vietnam has imported $111 million less cassava roots and chips in that 2-year period. Now, this is having a significant impact on cassava farmers and also industry. When we talk about the impacts on industry, you can see here in Tay Ninh, the price that they are paying for roots is well above what they're paying in Thailand. So you're paying, say, on average $30 more for a ton of roots in Tay Ninh at the moment. On the other hand, you're making less on your starch. So the margin on starch processing in Tay Ninh at the moment is very slim, and a lot of the small manufacturers are going out of business. The other thing this has meant is to maintain your margin and process as close to full capacity, you've had to seek your feedstock from further afield. So I remember when we did the initial household surveys, that about here was where the fresh roots were going into Tay Ninh, and beyond that, these farmers were making dried chips. Now the traders are bringing roots from as far as the Thai border into Tay Ninh for processing. This has meant that a lot of the small factories that tried to set up, and the not so small factories but carrying a lot of debt have folded in Vietnam, and we'll touch on that in another presentation. You can see the presentation by Dom here on the impacts of that border, and it's quite an interesting webinar that you can watch on YouTube. The other important thing is the the benefit derived by residues, and we shouldn't forget those when we're looking at the profitability. We say a ton of starch also produces maybe a ton of wet pulp, and at the moment processors in Tay Ninh are selling that for around $25 a ton. One of the other impacts that we're seeing is the expansion into Laos. In a previous slide, we had the exports from Laos, and in 2019, we were down here. But in 2020 already, for May, we're at $120 million, of Thai imports from Laos. And we'll touch on that again in the Laos presentations this afternoon. You can also see here the starch exports have also started to increase. Myanmar, also connected to the market, is the next frontier. You'll hear from Jaltura, I think, and Tin around the work that we were doing here. But the Thai market is also starting to look for roots in this area here. Finally, just to have a look at what something like COVID and trade restrictions brought about by the restrictions in movement meant. Initially, there was some stockpiling required in China, which meant that capacity of processing was reduced, which had some short-term impact on prices. What we did see, though, is roots getting stuck at borders. So on the graph here, this is the price of Cambodian roots at 30% when they get to the factory in Tay Ninh. But because they're losing starch content, the actual bulk price that you're getting in the Cambodian side of the border is much less, as traders hedge their bets about what the starch content will be when they reach the processors. We did get reports of markets closing in Myanmar, so no trading happening. And of course, as we spoke about before, and it will be touched on later, the importance of remittances and the non-farm sector for the livelihoods of cassava farmers can't be underestimated. So we will see these impacts of COVID continuing in the future. So just a few conclusions. The connectivity between countries, agricultural markets and sectors means that the price that farmers receive in one part of an upland community could be impacted by a policy or a shock thousands of kilometres away. Secondly, at the start of a project, mapping the domestic value chain that stops at the border doesn't capture the dynamics of that market and the risks that farmers will be exposed to. And finally, there is real genuine interest in the information around what's happening in markets and policies by a whole range of stakeholders. Back to why we think this is important, when we're looking at the economics of different technologies, it's important that we develop realistic scenarios with farmers. So this is in Laos, where we were using scenarios of 580 through to 400 kip per kilogram, and also looking at yields of 20 to 35 tonnes per hectare. So it's important that we can show this to farmers and show them that, yes, at this situation here, you are actually not making a positive return. But if you're down here, then yeah, you're making a very good return. So it comes down to how risky or how often we think that things may get down to 420 versus when they're up here. The final point I want to make is that there is a real need for real-time data on production, prices and policies. All actors need this information to facilitate their investment decisions, and we hope we can continue to collate that information and get it closer to real time by working with different partners. Thank you very much for listening. I hope there's time for some questions, and we'll hear from you soon.